What are the different types of real estate assets you can invest in? Stick around and I'll go over a few with you. Real estate comes in all shapes and sizes, and one size definitely doesn't fit all. A few types of real estates you can invest in are single-family homes, condos, and townhouses. This is usually where most investors start out. It's the lowest barrier to entry, and it's the easiest to finance. There's a lot of flexibility with single-family homes going into the asset, but then it also gives you a lot when you're looking to exit out of that asset too. Like everything, there are pros and cons to this space, but it can be very profitable and it can give you the confidence you need to tackle bigger projects. Small multifamily is generally considered anything more than 1 but less than 10, so 2 to 10 units. This is also a pretty low barrier to entry, and anything under 4 units is actually very easy to finance because you're using a residential mortgage. It's generally less competitive to single family homes, but can kind of give you that taste of a larger project that you might be seeking. I find it to be an attractive space because it's generally too small for some big investors, but it's still big enough to help you scale and maximize some of your operational efficiencies. Large multifamily investing is a major asset class that's pretty competitive, at least here in Denver. It's generally a safe investment, which is why a lot of investors are flocking to that space. At this time, it somewhat feels overpriced and very expensive to get into. Having relationships with brokers is imperative to this deal flow. Oftentimes, these assets are traded off market, which means they've got a seller ready to sell and a buyer ready to buy, and they just pair them together. So you need to have those relationships with the brokers so you can see those deals. The size of these investments make it very attractive for investors because you're able to scale relatively quickly and you can create operational efficiencies which can impact your bottom line greatly. Mobile home parks are one of the hottest real estate asset classes in the market today. As the need for affordable housing becomes more and more important, many investors are racing to the bottom in terms of what it costs to rent a space. These assets can offer healthy returns, good value add potential, and stability by having long-term tenants in place. There are also pitfalls you need to consider though, like having a large amount of park-owned homes, which mean as the owner of the park, I own the home rather than the tenant owning it. So you need to look out for park-owned homes. Also, it is ideal that your park is hooked up to city, municipal water and electricity. There are also pitfalls to consider, like having a high number of park-owned homes, having well and septic instead of municipal water and sewer, and then having a lot of vacancies can be expensive and cumbersome. It's a popular asset class for a reason though. If you can figure out the operational efficiencies on how to navigate this space, it can be incredibly financially rewarding. Self-storage is another space that's getting more and more popular. While this may seem like easy money, it's actually very systematic and operationally focused. It's a fragmented market, which means there's a lot of mom and pop owners out there, which can offer a lot of value add opportunities. If you can find yourself a good deal, then the benefits can far outweigh the cost of ownership. Much like mobile home parks though, the secret is out and it's becoming more and more competitive. Industrial is another great space for real estate investing. Here in Denver, we had a major industrial boom when cannabis became legal and the pot companies were looking for grow houses, and it was incredibly difficult to find any opportunities. But those who had the warehouses available and ready to go made a fortune leasing it out to the marijuana companies. It may be a little late here in Denver to get into that business. However, in other markets or maybe where marijuana hasn't been legalized, you might be able to find yourself in the path of progress. Retail has been hit in a big way by COVID-19. It would be great if we could see retail bounce back once these vaccinations come out and we can start getting back to business as usual. I have a few retail spaces myself, and we opted not to rock the boat with any of them. We were thankful for their tenancy and we're glad to see that their businesses were operating as usual. Sadly, many retail tenants have had to shut their doors and therefore break the leases. This can be difficult as a landlord though, because now you have to turn around and fill that space at a time when retail just isn't performing well. Much like retail, office space has been a real estate asset class that has been hit hard by COVID-19. Many businesses are reevaluating their need for big, expensive offices and opting for employees to stay at home and working remotely. It's probably too early to predict how office will rebound, but one space that still cranks out healthy returns is the medical office space. This may be considered its own category, but it's certainly recession resistant and is going to be needed for the foreseeable future. Land can come as raw dirt or as a cash flowing asset like farmland or mineral rights incomes. Obviously, with raw land, it's not producing any income, which somewhat defeats the purpose of a real estate investment. Having a cash flowing asset is generally what most real estate investors prefer and seek. These are just a few of the assets to consider when you look to enter into real estate investing. There are others, of course, but certain investors tend to gravitate towards certain types of assets. Make sure you do your homework and just find a space that you're comfortable with. Thanks for watching. If you have any questions, please leave them in the comments below. If you found value with this video, please like, subscribe, share it. We appreciate your support. Thanks.